Hey, this is Jim. It is 11:38 a.m. in San Francisco, California on March the 9th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So everything looks normal so far on this volume pattern that we're tracking. And you can see we're heading into sort of the apex here of this wedge. So coming up on the moment of truth, we've gone through the 6 hours of trading. And so really, it's the opening bar tomorrow morning. I mean, we could see a volume breakout here at the close, but more likely tomorrow morning. So you see there's a new note that I put here, 3.5 million plus on a green bar can kick off the advance. So the reason I say 3.5 million is what I like to do in these patterns is if we're in a downtrend, which we are here, I go back and I look at the spiking volume within this volume downtrend. And what I want to do is I want to look for a spiking volume bar that's a red bar. And so you can see where if I move back to the opening bar this morning, so, I'm on the West Coast, so this is the 6:30 to 7:30 in the morning trading bar. And you can see that this was a red bar. It closed down. If we go back to this bar here, that's a green bar. Now, if this one would have been a green bar and this one's a red bar, I go back until I find the first red bar. The reason is that what I'm trying to see is a reversal, a volume reversal. So if the highest spiking red close 60-minute bar is 3,378,969, which is what this is, I want to see a green 60-minute volume bar paint through that. So I want to see a green bar close with volume greater than 3.378 million shares. So, instead of rounding it up to 3.4, I just went for 3.5. That'll make it a little more definitive. And what that means is if we can get a 3.5 million volume bar tomorrow morning, first hour of trading, and if it can close green, that can create a volume reversal. So it's the same thing as if you were to have a price reversal based on sort of a candle pattern. Think of these volume bars as a candle. And then, of course, you're going to hover over to see whether or not the volume bar came coincident with a positive, green close or a negative red close. So that's what that looks like. And again, if we can turn up and print that volume on a green bar, we can be sort of off and running on another move like this. We'll take a look at Anemoi in a second here, and I'll show you guys that setup again that looks like we could have a 3-day run if we can just have a nice volume reversal here on the green bar. Now, something I didn't talk about in yesterday's video, and it's always a possibility, if it happens, that means that we're not tracking the behavioral analysis model directionally because it wants to track up. But if we end up increasing volume on this volume wedge breakout and volume starts to pick up like this, but instead of a green bar, we start to see red closing 60-minute bars, then that's obviously a very bad sign, and it means that the stock's going to continue trending down and even more sharply. We have the backdrop of the major market averages getting whacked today. And it looks like we're stabilizing here, at least for the moment. You guys know, if you followed me for a long time, that the way I look at sort of major market averages and whether or not that they can provide wind at your back or wind in your face, if you're trafficking in these meme stocks, is that if it's a garden variety decline in the major market averages, meaning 1 to 2.5%, the types of declines that we've had consistently during this bear market, then I don't really think there's any effect that I'd look for as a spillover effect into the meme stocks. But if we can get a severe decline in the major market averages, tomorrow and into early next week, to where we're seeing declines in the major averages of 3 to 7%, then there's always a possibility that someone who's too long some other stock has to run in and they're short in one of the meme stock positions. So it sort of turns into a potential liquidity panic. Same thing can happen with the Bitcoin. You guys have seen how it looks like we saw a scare when we had when we had on November the 9th, when Sam Bankman-Fried came out with an announcement after hours on November the 9th. And then we had that big spike in the cost to borrow for AMC on the 10th and 11th, and the stock ran, 60, 68%, something like that in a handful of days. So there's always a possibility that if Bitcoin's under severe pressure, it could actually benefit some of the meme stocks, including AMC. So here we are back at this setup we talked about yesterday. And the other setup, again, was we were focused on this hourly trigger, which is the violet line, coasting down and creating what we call a bullish airplane against this blue daily trigger. And then you saw another leg to the upside. So sharp leg up, pull back to this bullish airplane, and then higher high sharp leg up. This would be the same thing right here. I'll remove price again, and we're concentrating. Let me get rid of that. Weekly trigger. This thing's a pain in the ass. All right, it's not going to let me do that. So we're focused on the same thing. Hourly trigger coasting down to the daily trigger, and the rest is up to Mr. Market. We need to stabilize and turn up. Now you guys can see here that this was the equivalent of, this was January 31st, and then we turned up on February 1st, and then the 2nd, and then the 3rd and the 6th, right? So today would be the equivalent of January 31st, and then tomorrow would look like February 1st if we're going to have a successful bullish airplane out of this area here. Try to exit. Here's what the day trader looks like. Now, the one encouraging thing that we can see here is that you can definitely see that hourly velocity has been holding up. So you can see, here's your price, your black line. Let me remove some triggers here to clean things up. So you can see this black price line, and you can see your most extreme reading here in hourly velocity of minus 0.038. Well, you also can see the black price line stair-stepping to a sequence of lower lows, and then you can see the vertical hourly velocity holding up. So that's encouraging. And then what's even more encouraging is that we were able to curl up just enough here into this new hour of trading. So for me, you can see 11:45 now. So it was the 11:30 closing bar. So it's the 60-minute period we're in right now is from 11:30 to 12:30 my time, West Coast PST. And you can see that slight stair step up in velocity right here, you guys. So hourly velocity improved slightly for this coming hour. So that takes a little bit of pressure off the stock, and in theory allows it to rise. So we did also have a very slight divergence at the 1 minute level. You can see right here as let me get rid of this hourly trigger. You can see as price continued to make chopping lower lows, the gold vertical lines were holding up. So that's a bullish positive divergence, and it just tells us that price wants to move back to the 1 minute trigger, which it has already. Now, if you take a look at the 5 minute velocity, there really wasn't anything super constructive. I mean, there was not a bullish divergence into the low, but there is some nice repair going on right here as price curls up. So what we really would like to see is the a price action move above the 5-minute trigger, so 566, and that number's pancaking, so it's flattening out. So basically, if we can move price above 566 between now and the close, we have a shot at flipping the bot from short to flat. You guys can see that how well this algorithm has worked, and the fact that it's basically been short from right here from call it $6.45, and so it was short through this entire run down with only one slight whipsaw. You see it remained short, 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 short. Right here, it went flat, and then it went short again. So with the exception of that small whipsaw, trending short for the bot. Anyway, that's what things look like on my side, you guys. Again, we really need to see stabilization here. If we could just stabilize and move up slightly here today, we don't have to have anything crazy. That would put us in a pretty good position tomorrow. And then it's just, it really does literally come down to tomorrow's first several hours of trading. Now, the other thing that I haven't mentioned in a while is that if we do get lucky here, and if we do see a green 60-minute closing bar post 3.5 million shares during that 60-minute period or greater, and then start to increase more and more, what we really want to see, if we're going to have a very dynamic move into next week, is we want to see 3 consecutive 60-minute bars running at 15 million shares or greater, and they have to be green, so they have to close higher each of the 60 minutes bars, and they have to be consecutive. We can't have 2 greens, then a red, then a green. They need to be 3 consecutive bars above 15 million shares. So, baby steps. First things first, which is that we have to turn up, move above this 3.5 million on a green bar to snap the spine of this decline. If we happen to post 3.5 million or greater and it's a red bar, we're not looking too good tomorrow. We're moving into early next week. That's it from my side. You guys, good luck.